Do you want to save 20 to 30% of your building's yearly utility costs? Well, today's problem solved is brought to you by Parity, New York City's leading HVAC optimization service for condos and co-ops. Hundreds of property managers, board members, and resident managers trust Parity to improve their building's energy efficiency and save 5 to 6 figures on utility costs each year. To learn more, visit paritygo.com or email contact@paritygo.com.
Welcome to Problem Solved, a conversation about challenges facing New York co-op and condo board directors. I'm Emily Myers with Habitat Magazine, and I'm joined by Carl Cesarano, managing shareholder at the auditing and accounting firm Cesarano Khan. Carl, thanks so much for being here.
Thank you very much.
So most boards assume digital payment platforms are a safe and efficient way to manage payroll and expenses. But what if they're actually creating blind spot? In this episode, we're going to look at how a lack of transparency in these systems can open the door to financial mismanagement, delayed transfers, and even the diversion of funds. More importantly, we'll explore what boards can do to stay ahead of potential risks. Carl, this issue came to your attention when a co-op in Queens discovered payments weren't going directly into their official bank account. Is that right?
That is correct, Emily. The typical flow for the revenue side is there's an originator, which is the co-op or condo owner, or perhaps even in a homeowners association, the owner of their unit. Then there is a third party, whether you want to call it a sender, an intermediary, a clearinghouse, who actually facilitates the movement of the money. Now, the next phase of this is after that part, it typically should go to the receiving financial institution of the co-op, condo, or homeowners association. And then from that point, to the individual co-op, condo, or HOA bank account. What we have noted in several instances is between the point of the third-party sender or clearinghouse, payments were making a stop into another account before going to the receiving depository bank and then ultimately to the account the co-op, condo, or homeowners association. We've noted situations where it was actually not the name of the co-op, condo, or HOA. And we've also noted situations where it goes into what was framed as a kind of clearing or sweep account in the name of that particular co-op, condo, or homeowners association. So there was a bit of a lag. And in many of the cases, the board was not aware of that account and they did not have control of that account. And the argument always seemed to be, while we were doing our audits, is, well, your money ultimately got there, didn't it? And we said, well, yeah, in the cases we saw, the money ultimately got there. But now this creates a whole different level of doing a risk-based audit. We have a new level of risk. We have to design procedures to look for this. You have issues of unauthorized accounts opened on behalf of these boards. Nobody at the board level is aware of it. So you do have a lot of room for other types of potential fraud, whatever that may be.
So what possible reasons might an agent or platform have for diverting these funds? I mean, are there legitimate explanations?
Well, especially in the rental industry, have this concept of a sweep account where they say, look, we kind of sweep everything into one account and then we redistribute it where it belongs. Another explanation that I heard was it goes into this account, and if the transaction clears, then it will move through the system.
So even if no money is technically lost, what are the financial risks for these delays for co-op and condo boards? What should they be aware of?
So the defense always seems to be, well, please quantify your loss. What did you lose? So you said there was an intermediary account, but you said you ultimately got your money. And in the vast majority of cases, that is true. However, we don't know if that will always be the case. Once there's a loss of control and a lack of transparency, anything can happen. That's number one. Number two, it's the lag and the time value of money. So hypothetically, if that adds another day, 2 days, 3 days, week for us to get our cash flow, then it really hurts the budget because we have planned for every dollar coming in by a certain date so we can then pay our operating expenses. But one of the important things in risk-based auditing, which is what you're required to do, is to go in and evaluate risk. Based on that risk, you design procedures to look at the transaction flow, the workflow, and to opine as to whether, this flow is working. And this will determine the amount of testing you have to do.
How did this discovery come about? Because, of course, it's going to be useful for boards to hear how you uncovered this intermediary bank so that they can see if the same situation is happening in their financial transactions.
The one that really sticks out in my mind was when you look at the same platform using, say, managing agent A, and you could see the flow, the coding, how the money comes in. And it should go from, in theory, from, say, your account to your bank to the intermediary, and from the intermediary to my bank, and then into my account. But then we've seen where it was actually coming from another account.
So as an auditor, you were able to see it perhaps more clearly.
If you're not looking for something and you do your planning and your audit procedures and, there's a certain sample selection, there's an inherent risk that you may not see it because you're not reperforming every single transaction. You're looking at selective transactions. And of course, it's all about transparency and informing these boards as to what's going on, right? You have to look at this stuff in real time because everything is outsourced on a third-party company.
So let's look at then what co-op and condo boards can do to improve their oversight of digital payments. But first, can I just ask you what steps the board took once they discovered this issue?
Well, of course, they had a meeting with us. We explained the flow of the transactions. They got their legal counsel involved, got their managing agent involved as well. In many cases, there was a change of team, if you will, because there was no transparency. They weren't informed. They felt that, their planning was totally off because of it. They thought it was inappropriate. I mean, all these things are valid points. And in some cases, it was cease and desist or else, let's put it that way.
So then how do co-op and condos get digital transparency and more oversight of their platforms they're using?
The role of the treasurer is very important in this matter. You're kind of the custodian of a lot of things, financial, is to really look at the reports, look at the flow, look at the bank statements. This issue is not only on the revenue side, it also happens with respect to the payment side. So that's become an issue as well. And I would say that's the more common issue on the electronic platform world.
So what's the solution here? As you pointed out, digital payments are here to stay. What can boards do then to protect themselves?
Well, I would say that you must have approval of everything over, let's say, $500, or even make the benchmark lower. When these charges are made, management and or the board should get these receipts immediately. There should be a reconciliation of the receipts to the bill and then a reconciliation of that to the underlying books and records of the co-op or condo or homeowners association.
Carl, thanks so much. So many good reminders there for boards on financial management and adapting to the use of digital payments. Thank you.
If you're on a co-op or condo board, you understand how complex residential finances can be. That's where Cesarano and Khan comes in. With decades of experience serving New York's co-op and condo communities, we provide flexible, adaptive audit services tailored to each property, along with seasoned tax services, transparent election tabulation, and strategic board advisory services. The result? Clear financial reporting, confident decision-making, and greater transparency for your organization. Trust the firm that understands the unique challenges of co-op and condo financial management. Visit ck-cpas.com to schedule your free consultation. Cesarano and Khan and the specialized co-op and condo financial services done right.